there, Daniel Ashby from the BSure Group. It's my great pleasure to share some details with you regarding our latest product, the BSure Broker Tool. Now again, if you're a mortgage broker, chances are you're concerned about responsible lending. What does it involve? What do I have to do to remain compliant? And again, survive one of these ASIC audits that are promised to be delivered into the industry here in 2011. I want to share with you some basic details that the BSure Group has collated from ASIC's RG manuals to ensure that you're aware of what you have to do as a broker now and how our BSure Broker Tool can make some of these things a reality for you to ensure that you can remain profitable and compliant in an easy and efficient manner in 2011. Let me share some of these details with you.
Point number 1. Responsible lending applies to situations where you act, suggest, or assist clients seeking new credit or refinancing credit. Point number 2. You must have a responsible lending procedure, a system that is followed for every client each and every time. Point number 3. Your preliminary assessment must be in a format ready to give to your client if requested. Point number 4, your systems must identify when the unsuitability of a loan is apparent or foreseeable and you must walk away. Point number 5, your recommendation of affordable or not unsuitable can include expenditure and cash flow suggestions. Point number 6, ASIC will determine reasonable in the event of an audit. Point number 7, ASIC is here to protect the client, not you. Point number 8, you cannot rely on the bank's responsibilities or serviceability criteria to meet your obligations. And point number 9, your preliminary assessment must include a review of the product needs, verification of the financial position, and an assessment of the affordability. Now let's take a quick look at what ASIC's regulation guidelines have to say about these inclusions. RG 209 says, depending on the circumstances, reasonable inquiries could include the amount of credit needed, the time frame for which the credit is required, the purpose for which the credit is sought and the benefit to the consumer, and whether the consumer seeks particular product features or flexibility and understands the cost of these features and any additional risks. Regarding verifying the financial position, you're obliged to take reasonable steps to verify a consumer's financial situation. Generally, this will require some positive steps to verify the information provided by the consumer. Regarding the assessment of the client's affordability, depending on the circumstances, again, inquiries could include the consumer's current amount and source of income or benefits, the extent of the consumer's fixed expenses, the consumer's variable expenses, the extent to which any existing debts are to be repaid from the credit advanced, the consumer's credit history, the consumer's circumstances, including their age and number of dependents, the consumer's assets, including their nature and value, any significant changes to their financial circumstances that are foreseeable, and geographical factors such as remoteness which may require consideration of specific issues. Point number 10, lastly, you must form a reasonable independent view of the loan as being unsuitable or not unsuitable. Again, regulation guides say making a preliminary assessment will require you to take active steps to form a reasonable view as to whether the contract is not unsuitable. Let's summarize these requirements quickly. Your responsible lending procedures must be a systemized process that you can show ASIC has been set into a procedure. You must assess their affordability, their income, their fixed expenses, their variable expenses, surplus funds, assets and liabilities, etc. You must verify their financial position. Independently of the bank, you must deem a loan as unsuitable or not unsuitable, and you must take these details in an affordability report or a preliminary assessment report template that's suitable to provide to your client. Remember, your responsible lending procedures must analyze the client's information and deem it as unsuitable or not unsuitable before you go source a bank that agrees with you. It's our pleasure and privilege to advise that the BSure Broker Tool is going to do exactly that for you. Let's take a really quick look at how it operates and some of the benefits you can get from using the BSure Broker Tool in your business. Step number 1, you send the client an introduction email that has an embedded BSure Broker link. Step number 2, the client follows the link to a secured BSure questionnaire completing assets, liabilities, income and expenditure details. Those details are then synced to the broker's desktop application for review. Step number 4, the functions of the BSure Broker tool include: you can review their income, expenditure and their surplus funds, and what percentage of those surplus funds are going to be used up by the mortgage, according to the information provided to you by the client. You can adjust their expenditure amounts to display visual graph affordability outcomes. You can forecast additional or expenditure changes anticipated with the new property purchase or lifestyle changes. You can generate relative templates for the client's acknowledgement of your recommendations. And the information is collated into reports both in Word and PDF format. So remember, be compliant, meet your responsible lending obligations, and survive one of the ASIC audits that are promised to be released to the mortgage broking industry. Be sure, get a filter for your unsuitable clients. Make sure you're remembering every client is either an asset or a liability to your business. Be referable. Add value to your clients, providing hands-on help analysing their mortgage's effects on their daily finance. We're offering a free trial at the moment of the BSure Broker tool with every purchase, so why don't you contact us at thebsuregroup.com.au. We look forward to speaking to you soon and helping you operate compliantly and profitably in 2011.